Talking about big tech earnings, it's Dan Ives who covers a lot of these companies, and maybe he's right. We get through this earnings season rather unscathed, but then who knows? Who knows what the story is?
I think that you had the last 10 years, obviously the proverbial FANG, and you could just buy the cues and have wonderful capital appreciation across the board. I think we're entering this time period. We already see it. We're not entering it, where there's going to be a lot of dispersion among these big tech names. I mean, to me, what's interesting is that, Tesla's down 37% year to date, but it's lost almost all of that in the last month. So a big cap tech name that finds its way in pretty much all of the growth indices has lost, I think it's 27% in the last 30 days. And so Tesla actually comes out with earnings. It's either tomorrow or Wednesday. And so I'm really curious to see that, because fundamentally it seems like something's broken down within the stock, not the company within the stock. I mean, look at Facebook, look at Netflix. These are companies that have had huge dispersion from the Googles, the Microsofts, and Apples. And so then I think that investors need to have more awareness of these individual companies, because I don't think these FANG-type names or acronym names in general will do well over the next few years. And I think you have to pick your spots. And to Steve's point earlier about semis, semis obviously are very cheap, but everyone needs to think through all of the impact that the White House has done over in China and what that impact is on the individual names, because it doesn't treat all of those semiconductor names equally.
Hey, Brent, it's Joe. Isn't it, though, Tesla declining on the expectation that Elon Musk might have to sell stock for the Twitter acquisition?
Sure. I mean, sure. If that goes through at that number, that's part of it. But to have such a big decline on a very expensive name, by the way. Okay, so Tesla's not cheap, and it finds its way through there. Bottom line, if you were an owner of Tesla or have a big, large position, Tesla, from a technical chart looking back at 2017, has really broken down against a lot of support. And so now you go into the statisticians and the traders that look at Tesla technically. It doesn't look good, and so all of a sudden that stock can take on a new dynamic because of what Elon had to do. But from a trader and a technician, it is what it is. And so that is not positive for large cap tech when Tesla has broken down on these technicals.
Weiss, the moral of this story is going to be that 2022 earnings are not the problem. But don't write too much into it, because when you really get into the early part of next year, the rubber's going to hit the road of rate hikes and further slowdown. Remember, they've only been hiking rates for 6 months. It takes a good amount of time for all of it to filter in and into the system. My point being, look at, the banks are off to a good start. Look at Bank of America. One of the few stocks that you actually still hold and like.
Yeah, I mean, it was a stellar performance. I mean, Brian Moynihan, I've come out and said many times, I think is the top CEO there. I mean, Jamie Dimon, of course, is up there as well. But take a look at what he's done. I was surprised by net interest income, that was good, and, loan growth. I mean, those were surprising because we haven't had loan growth up until this point. We've had some of it, but not what anybody expected. So there are some stocks to buy. Keep in mind, B of A is well off its highs, and it's a cheap stock. But, if you look at it this way, Jeremy Siegel has been on our show a number of times, been on a lot of CNBC shows. If you buy into what Jeremy Siegel says, then we haven't seen the crash in earnings or the economy. If the point that he's making and that Barry Sternlicht's making, which is that the Fed's gone too far too fast, you're going to see the impact. And that impact is not going to be good for equity markets. And you're right. It takes two quarters to 3 quarters for it to really filter through. And you've still had some pretty good savings out there. And you still had people that prefer their leisure time to working. So they're out there buying more goods and services. But we've yet to see the impact. Now, to Mike Wilson's point, the market continued to go up in the interim. But then you get to saying, OK, how am I going to play this? And I choose to have a point of view and stick with that view. Once again, I'd love to buy some stocks. I love when markets go up. I hate when they go down. But I'm just not there yet. I may pick some up, but I'm not so sure this is even sustainable today.